Hey, this is Connie from Prosperity Finance. I hope you're doing well. Now, in this video, I'm going to share with you a very common question asked by our clients. That is, what is the downside of having two or more property secured with one bank? That's a really common question we get asked all the time, because every time when we talk to clients and we notice they have two or more property with one bank, we always suggest them split the banks. Well, the bank won't tell you that because they want to have as many as security as possible so that they feel safe. But from your perspective, the less the better. Now, in this case, I'm going to share a case study with you. This is a really classic example. It can demonstrate four areas of, the disadvantage of having all your property with one bank. So let's say this couple is Mark and Jane. Now, Mark and Jane are a married couple. They have a family home and they have two rental properties. Family home is in the family trust, and two rental property are owned by a look-through company. Now, they're going back to their own bank, ANZ, and ask for further lending because they want to buy apartments as next rental property. Now, bear in mind, all their three properties are secured with the ANZ. Now, the outcome from ANZ is no, you can't borrow further. Now, client came to us. Now, we do have a solution for borrowing more for them. However, we noticed that all their property are secured with one bank. So before we do the new lending, we actually reviewed the structure and suggest them split. Let's have a look. Why is that? So, as mentioned, client have a family home in the trust and two rental property in the LTC. Now, that's their loan balance as at now. And the lender is all ANZ, and the purpose is investment home, and the value of each property. Now, what are the downside? Firstly, your family home is exposed to your rental property investment. Now, if anything wrong with loan repayment under the LTC, your family home is exposed to the risk. Now, bank can take this property and sell it to repay your loan in the LTC. They can do that. They all cross-secure. Okay, so you don't really want bank have a cross guarantee between the entity, and you don't want your family home in the same bank as your rental property. So that's number one. It doesn't happen often, but do happen. So if you can separate them, it's best to separate them. Now, the second issue is if you sell any of these property, let's say sell this property. Now, maybe because you need the money to do something, right? Say you can sell the property for 1.12 mil, and you thought, oh, just pay off 650K. That's actually not the case. The bank will tell you how much you're going to repay because we call it partial discharge. Partial discharge means you also have other security after discharge this property. So they're going to reassess your situation. They will look at if other two property has sufficient value to cover that 910,000. They also need to say if your income is sufficient to cover 910,000. If not, then they will ask you to repay more than this number. Now, the worst scenario is after paying your real estate agent commission, they will take over all the net sale proceeds. So you won't have anything left to do any other things. Okay, this is a really common partial discharge that creates a lot of issue, and normally you don't find out until a settlement for the sale, and it's too late for change your mind. Now, the next thing is, as mentioned earlier, ANZ said you can't borrow further. Well, yes, you can. It's just not from ANZ. You can borrow 70% from another lender who can lend you that 500K, but they won't lend you 100% because as an investment, you can only borrow 70%. So where the other 30% come from? If you don't have the cash, then you need to utilize the equity in the property. You can see client has a good equity in the three property, but you can't utilize because the ANZ said you can't borrow more. They can't give you the top up. Instead, if you have, say, this property in a separate bank, say Westpac, then you can use that equity and you can borrow 100% without any cash down. Okay, so that's about further borrowing limitation. Now, the last thing is, when you have everything with one bank, when it comes to renew, like the loan fixed term is coming off and you want to refix for another term. Now, you probably potentially face two risks. One is higher interest than any other bank. What if ANZ charge you 0.2% higher than other bank? It does happen, probably at the time when you borrow the money, that's the best offer, but could change. So the higher the loan amount, the higher the interest costs compared to if you split your security, right? The other thing is, if you are interest only for your rental property and the interest only term is coming off and you need to pay principal and interest, so that creates extra cash flow stress for you, versus if you have some of your loan with other banks, you're probably interest only term coming off at different times, so give you time to adjust. So that's about interest only term termination. Yeah, that's about it. So cross-secure and partial discharge and further borrowing limitation, and finally is in terms of maintaining your loan and minimize the cash flow stress. So I hope this video is useful for you. If you have two or more property with one bank, before you borrow further, please take time to review and see if you can split them. Now, if you don't know what to do with your loan structure, obviously the best way is to contact us and we'll do an obligation-free review for you. All right, thank you so much for watching. If your family and friends would benefit from this video, please feel free to share with them, and don't forget to subscribe our YouTube channel. Thank you. I will see you next time. Bye bye.